Hey everyone, Coach Investor back to another video for today and back with another Amazon video. I've been talking about Amazon a bit more lately because I do think that even at the size that Amazon is today, I still think it can outperform quite nicely in the years to come, because if you look at the stock price in the last couple of years, as we've talked about in past videos, it hasn't really moved that much. Yes, in the past 5 years, it has done quite well. But if you compare it to the likes of Google, Microsoft, Apple, it hasn't really performed as well. If we're talking about part of the FANG family, Amazon has been lagging a little bit. And the main reason why that has happened, we've touched on that a couple of times, and that's because of the retail part of the business, which is something we're going to talk about in this video as well. But before I do so, if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Also do check out all the other links down in the description below. So first things first, here is obviously the Amazon Prime Day. We've talked about that in my last video, how Prime, the aspect of Prime, the subscription aspect of Amazon is something that shouldn't really be overlooked. So first of all, Prime Day 2022 was the biggest Prime Day event ever. Amazon Prime members worldwide saved $1.7 billion, more than any other Prime Day event. This year was the biggest Prime Day event for Amazon selling partners, most of whom are small and medium-sized businesses whose sales growth in Amazon store outpaced Amazon's retail business. Prime members purchased more than 300 million items worldwide, which if you think of it is pretty insane. Now I'm going to go and look at some of the impressive stats here. So Prime members worldwide purchased more than 100,000 items per minute. I'll repeat that, 100,000 items per minute during this year's Prime event. So if you hear somebody say that, well, the consumer has an issue, no, the consumer is pretty strong and has enough money to survive. And then as for small businesses, customers supported small businesses in the 3-week lead up to Prime Day, generating more than $3 billion in sales for small businesses included in the support small businesses to win big sweepstakes. And secondly, customers purchased more than 100 million small business items in the 3-week leading up to Prime Day. Now, the main reason I'm putting some emphasis on the small businesses here is because of the main topic of this video, and that's the fact that, well, Amazon will more than likely stop selling their own products, and that means that third-party sellers, third-party products will be sold more and more, which means higher margins for Amazon and more lower costs, which we're going to touch on that a little bit later. But first, as always, I like to have a quick look here on StockCard and probably add Amazon to this channel's portfolio, as well as the portfolio I'm using in my competition that we're having here on this channel. Link will be down in the pinned comment. If you win the competition by the end of the year, basically by beating me, you get $250. Top 5 will get access, VIP access to this platform right here, which is StockCards. So Amazon.com, high growth potential, check. Strong operations, check. Calm investor sentiment is neutral right now, same return as the market. So if you look at the 1 year right here, it's down 37%. The last 5 years, it's up 121%. In the last 3 months, last month it's up 8%, but the last 3 months, 25%. The last month it's up 8% because also of the stock split and the effect of stock splits on, well, big companies like Amazon. Now it's also a fairly priced stock. And then for the analyst consensus, as you can see here, it's pretty clear. 37 has a buy rating, 1 hold and 1 sell, with the average price tag of $174, while right now we're sitting at $113. So quite a nice upside there. Now, yes, I do want to mention a super high PE ratio because of, well, first of all, the big hit they took with regards to Rivian, the big hit they took because of their retail business. Now, yes, if you look at the PS ratio, the price to sales ratio, that's low. But again, Amazon, the company that it is, it should be more profitable. Free cash flow negative here, but that could change in the future and could change very, very quickly. And as I said, this is the channel's portfolio. We're going to add Amazon to that portfolio. Usually in the reason for decision, I will add the link to this video. So every time you go and see why we bought, basically you will be redirected to the video and then maybe make up your mind if it was a good point or a bad one. And again, if you want to follow this channel's portfolio, both of them, and participate in the contest, it's free to do so. Link down in the description and in the pinned comment. Now let's talk back about the fact that Amazon is going to ditch Amazon Basics. So Amazon Basics, you've probably seen the Amazon Basics batteries, but there's much more than that. Basically, this is the first party things that Amazon sells, which is usually cheaper, right? Usually cheaper. You can buy, I don't know, batteries, 50 batteries, 40 batteries or something like that for $13. Whereas if you look at the competitors, Duracell, GP, they're selling what? 16, 14 batteries for $14 or something like that. So obviously most people will choose the Amazon batteries. But remember, Amazon will not really make money on those batteries. First of all, there is shipping costs, which cost them a lot. And as we've talked about in the past videos, fuel prices are going up and Amazon is spending a lot of money on fuel because, well, those packages need to be delivered. Second of all, since it's an Amazon product, it's not sponsored, it's not being advertised, so they're not making money on that. And third of all, again, if it was sold via Duracell's post, they are taking a cut from that sale. Since it's coming from Amazon Basics, well, that's not happening either. And so we're back here with the last quarterly earnings. By the way, they are reporting earnings on the 28th of July alongside many other companies. I will obviously cover all of that on this channel. So if you want to follow that, subscribe below. So net sales, online stores, $51 billion. That's actually down year over year. Now this is the issue here. This is Amazon selling way too many stuff and not being profitable. Third-party seller services, this one is higher margins and this one should increase, which means that when Amazon will stop selling their own goods, the first-party goods, this number right here should be decreasing and this number right here, third-party sellers, should be increasing. Now, yes, I am well aware that as a customer, this is not good because I will have to pay more for my batteries, whereas right now I can have more batteries for around the same price as the competitors. But as an Amazon shareholder, you would want more people to buy those expensive batteries, let's say, because, well, one, maybe fewer people will actually buy those batteries, which means fewer packages should be delivered. Now, you might say, this doesn't make sense. How is Amazon then going to make money? Well, Amazon is going to make money because, remember, if somebody clicks on the sponsored product, on the advertised product, that means that the person that advertised, the company that is advertising that product, is already paying Amazon some money. Second of all, once they sell that product, Amazon takes a cut. So they don't really need to sell that much more. They can sell less, but less can also mean more, and more meaning more margins, more money. So again, I don't mind these numbers right here, the online stores coming down, as long as third-party sellers goes up. And if this happens, right, if the Amazon Basics stops, usually what will happen is probably that advertising will go up as well. So one segment goes down, which is a unprofitable segment, to be honest. Then segment number 2, third-party sellers, will probably go up. Advertising services will probably go up as well. And then probably there's going to be some, well, sales, etc. if you are a Prime member, so subscription services should be going up as well. I'm not talking about AWS because AWS is a business on its own, high growth, super high margins as well, but purely talking about the retail part here because the retail part is what has been dragging Amazon through the mud. Super high expenses, very low margins. So this announcement is actually bullish for Amazon shareholders. Maybe less bullish for the consumer, but then again, do you want to go and buy your batteries at the store? I don't think so, because you need to go out of the house. You need to go to the store. And even if you're in the store, maybe they don't have the battery, so you're losing time. And as we know, time is money. This is something that Jeff Bezos has been talking about a lot when he was at Amazon. Time equals money. If Amazon, with your Amazon Prime, can reduce the time wasted to buy, mission accomplished. And people are willing to pay a little bit more if they don't waste any more time. And so I'll end with this. I do not expect an excellent quarter from Amazon at the end of the month, but I do expect the next coming quarters to be much better, especially if that news gets more traction, if they're moving much faster than expected. I do know that a lot of batteries are out of stock already for a while. How do I know that? Well, because I wanted to buy some batteries and they have been out of stock for over a month now. So I'm extremely bullish Amazon, whether it's AWS, whether it's advertising, or whether it's Prime. And now with this news, I'm becoming a little bit more bullish on the retail part of things as well. And obviously do share your thoughts down in the description below. If you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next one. Bye bye.